Hello, this is Joe Novickas from highschoolinvesting.com. Today, this is a quick lesson for both teachers and students on what is going on in the current market that we're in. So as you're kind of learning how to trade stocks and how to put orders in and look at chart patterns and make watch lists, the one thing that is really hard right now is we are not in a trader's market. Let me just show you why. I'm going to look at an ETF. It's an exchange traded fund. It mirrors the S&P 500. So remember, the S&P 500 is an index that measures 500 of the larger companies traded in the U.S. And so an ETF that kind of mirrors the index, the S&P 500, is called SPY, ticker symbol SPY. So if we go in here, you can kind of see today 76 million shares exchanged hands. So this is a highly liquid ETF that's traded quite heavily. And I want to kind of focus in on the chart to show you the market that we're in. I like to look at the charts using candle because then I could see kind of the movement, the volatility that's occurring in the chart. So I'm going to just go out to a 3-month chart of the S&P 500, the ETF SPY. So you can see right here, late June we had the Brexit. They voted to leave the European Union. Of course, the market sold off quite heavily there. But since it recovered pretty quickly, and now the market is kind of in a very, very tight range. And this is one of the tightest ranges we've seen. There's not a lot of big bars here in the chart. It's very, very small little movements every single day. This is not a trader's market. There's not a lot of volatility. A lot of traders are just kind of watching this market and waiting for volatility to come back. You can kind of see if we even go back a year, you can kind of see if we look at this year from left to right, we can see some big volatility moves here, some big bars. And look where the smallest ones are at, the current market that we're in. So be patient. Right now, I know you're excited. You want to trade equities. You want to trade stocks. You want to buy and sell ETFs. The hard part right now, there just is not a lot of volatility in the overall market. If I go back 3 years and look at the market, you can see where are the smallest bars at. There's kind of a few here. Here we go, right at the current market that we're in. So be patient. Let's watch the market. Let's watch what happens. Right now, the Federal Reserve has kept interest rates where they're at, and it seems like they're going to keep it that way at least for another month or so, maybe more, depending upon the economic data that comes out. So the market is really tied into what the Fed does right now, and we can kind of even see going back 5 years in the market, and even 10. You can kind of see there's the financial collapse, the pullback, and you can kind of see this is steady climb, and here we are kind of at a all-time high at our current levels. So keep an eye on the market. We'll see if we'll break out and the pattern continues, or if the Federal Reserve increases rates, if that will have a big impact on the market, but we want to continue to watch the market. And remember, the rest of the world has negative interest rates in different parts, and so more capital is being flooded in to the U.S. equity markets. So there's a quick lesson. Take a look at it. Keep your watch list updated. And remember, our trading competition as a website, we'll have our first one for the month of October, and another email will come out on that. All right, happy trading. See you next time.